Despite global uncertainty, markets rallying this week with the Dow extending its longest winning streak in more than 3 months. My first guest is a leader in the international banking world, running the entire North American division of BNP Paribas. Jean-Yves Fillion is the North American CEO of BNP Paribas. It's great to see you, Jean-Yves. Thank you so much for joining us.
Thank you for having me, Mary. Glad to be here.
Yes, I mean, the markets have been really strong. I want to get your take on what you're seeing out there. Tell us about your business lines and whether or not you're seeing this kind of euphoria from your standpoint.
Well, the global economy has been very strong. The GDP growth last year was 4%. It's one of the best, metrics the world economy has seen over the last probably 15 years.
That's a very good number.
And it's across all regions. It's Asia, it's obviously the US, and it's Europe. The turnaround in Europe has been quite impressive, supported by a central bank that has really applied there what the Fed has been applying here for many years in terms of quantitative easing, supporting low rates, and providing much more liquidity and stimulus to an economy that is doing pretty well. The GDP growth there is pretty close to what we're experiencing here in the United States.
Right.
And the unemployment rate is at its lowest for the last many years as well.
Yeah, and in the U.S. as well, almost full employment. How are the capital markets businesses doing at BNP? Let's talk about your wealth management business and what you're seeing in terms of transactions.
I think the main comment I would have on markets is the return of volatility. Last year was quite abnormal with the VIX in the single digit. Today the VIX is back in the double-digit space between 15 to 20, and it's been good. It's been really good for the business because clients have become more active, and on the transaction side, it's helped our client activity, but as well our market activity. BNP Paribas is one of the largest derivatives banks in the world, and obviously today clients, with the volatility we see, are very focused on hedging, on protections, on risk management, and we can advise them quite efficiently across the main impacted areas: rates, currencies, and more recently commodities.
How about M&A? Are you expecting M&A to pick up this year?
Well, we've seen M&A picking up. And what's interesting in the recent trend, it's across industries. It's not usually it's one or two, and here it's been quite generic. Probably part of it is another round of consolidation in some of the most mature industries. But what's been interesting and really beneficial to BNP Paribas, we've seen M&A picking up in the transatlantic dynamic. We've been supporting European investors in this deep US market for capital raising, acquisitions. The strength of the euro, at least over the last year, has probably incentivized even more C-suite of European companies getting more aggressive and ambitious in the U.S. market.
And what are you seeing in the wealth management business? Do you see investors today wanting to take risk? Are they wanting to move to various different alternative investments, or are they looking at the stock market?
Well, that's a very good question here. At times with clients, I see convergence in terms of opinions, and at times I see different trends. Here in this space, it really depends on the risk appetite. But across the asset classes, I think because of the status of the world economy and because of this positive dynamic we see, particularly in the United States, I see investors be still looking aggressively for yield, as long as they can really understand the fundamentals and the underlying risk they're taking here. But of notice, to your point, we've seen recently, my position, I have the privilege to sit between Main Street, the retail activities we have in the United States, Wall Street, our investment banking platform, and international markets.
Right.
Because of the strengths and the status of Europe, we've seen actually investors and invested money kind of going away from the US environment and the Asian environment and being reallocated into Europe because of the growth expectations there. And if you look at the last few months, European equities have outperformed US equities by 5%.
Right, and people feel like maybe there was more growth potential in Europe and the valuations were lower.
Absolutely true.